Welcome, you're listening to the X22 Report. My name is Dave, and this is episode 1344A, and today's date is July 30th, 2017, and the title of the episode is Indicators Are Popping Up All Over the Place, Warning that the Economy is About to Implode. Now, before I get started, I just want to make an announcement. I uploaded an interview with Jim Willey. It is on the X22 Report Spotlight YouTube channel, so you can go over to YouTube and just type in X22 Report Spotlight. You'll see the interview there. You can also see the interview on the X22Report.com and NewsSentinel.com websites. Just scroll down, look over to your right-hand side, you'll see the video there. Or you can go to Steemit and you can view the interview on Steemit. And I have another announcement. Thank you for all those people who have been writing me emails asking if I was okay. Everything is fine. I was just visiting family, and the time frame of doing the report and getting to family and doing everything just didn't work out. And that's why there was no report on Friday. I thought I was going to be able to have time, but it just didn't work out. And that's why I'm doing a full report on Sunday. But once again, thank you for everyone that has been writing in and asking if everything is okay. Everything is absolutely fine. Thank you. Let's get into the economic collapse financial news. Now, as we can see from all the data that we've been looking at, I mean, if you listen to the corporate media, it's completely different. If you listen to the U.S. government, it is completely different. If you listen to the Fed, it's completely different. But when we're looking at all the economic data, what are we seeing? We're seeing the economy completely slowed down. The UMich consumer confidence, well, that data is showing us that the trend is slowing. Right now, it printed at 93.4. This is the lowest since October of 2016, right before the elections. And the biggest driver of the decline was a tumbling expectation index. People are not expecting the economy to get any better right now. And there are certain signs that actually point to this as being the real thing. And we've been looking at many different indicators. We've been looking at many different signs. We've been looking at many different aspects of the economy. And we start to put all these things together, and we do see the economy starting to implode on itself. Now, the last two times Americans were saving the amount that they are saving today, which is maybe a little bit more to maintain their lifestyles, the U.S. economy was in a recession. Right now, American households, they scaled back their pace of savings to the lowest level in 9 years. This is the lowest reading since a 2.8% rate in the final 3 quarters of 2007. Just as the U.S. was entering a recession. Now, that is a sign, once again. Now, it's not like we're just looking at one indicator. We're looking at many different ones and putting them all together. And when you start to look at all of them and you start to say, okay, this one is saying we're in a recession because it happened last time. Corporate tax receipts, they're declining. This is what happened in the last recession. State tax receipts are declining. This is what happened in the last recession. GDP numbers lower, even though they're manipulated, they're lower. This is what happened in the last recession. People losing jobs left and right. This is what happened in the last recession. Corporate debt rising. This is what happened in the last recession. When we start to look at all of this and we keep seeing the same patterns over and over, it tells us something. But again, the U.S. government, the Fed, those who are in power, they like to change history. They like to go back in time and basically revise or manipulate the numbers even more to make it look like everything was fine at a certain period of time. And they're doing this today. Now, if we go back in time, we can see that they've been playing around with GDP numbers. And what's very interesting is that the numbers under Donald Trump's presidency, they were all revised lower, or right before he became president. Now, one amusing finding here is that the following revisions in the third quarter of 2014 is now said to have been 5.2%, while the first quarter of 2015, that GDP number, which was blamed on, the really bad weather, and we had a lot of snow and things like that, they pushed that up to 3.2%. Now, that was under President Obama. So they're going back in time and they're pushing these numbers up and making it seem like the economy was incredible at that time. Now, remember back in January of 2015, after we had a lot of heavy snow, cold weather across the country, and a lot of cities were getting hit. The first quarter GDPs, that was a disaster. Now, the Wall Street Journal, they came out saying, yeah, GDP is not going to be looking good. Basically, this is what they said. Brace for blizzards and other bad weather to hit the economy again this winter, though perhaps not as deeply as last year. The forecasting firm Macroeconomic Advisors on Thursday said heavy snowfall pounding the Northeast and parts of the Midwest will subtract 0.4 percentage points from the gross domestic product growth in the first quarter. Now, Forbes came out and said, many economists and investors are pointing to a snowy, wintry weather. This is why we're seeing this weakness. And all this came out to be true. The GDP numbers came out, and the U.S. economy only grew by 0.2%. This is what they released. Yes, they go back and they say, okay, we have to adjust for seasonal anomalies and things like that, which are, they're seasonal adjustments, and they brought it up a little bit. But that year, they said, well, we're going to do a double seasonal adjustment to eliminate what just happened here, which really what they were trying to say is they wanted to bring the numbers way, way up. So basically, they brought these numbers in the first quarter of 2015, they brought the number all the way up to 3.2%. So now we're starting to get readings during Obama's presidency that the economy was doing a lot better than it really was, because now people are going to look back in history and all they're going to see are those numbers. Oh, look, the first quarter of 2015, we had a 3.2. Oh, this quarter we had a 4.0%. This quarter we had a 5%. So unless you're comparing everything, this is what people are going to see. And this is when they announce these things, this is what people are going to remember. Why are they doing this right now? Because they want everyone to think and believe, and people have very short memories. Unless you research it and look it up on the internet and go back in time and take snapshots, they'll believe that, and they're revising these numbers now at the end of 2016 to 2017 lower. Very interesting how they're setting this up. Now, we mentioned that the SEC, that's the Securities and Exchange Commission, they are now cracking down on cryptocurrencies. They're very, very nervous about cryptocurrencies. They're afraid of them. And so right now, any ICO, initial coin offering, they have to meet the SEC warnings. Now, what's very interesting about this is that the government, they really can't do anything about cryptocurrencies. Yes, they can put laws in place. But we need to remember something very interesting, is that the crypto regulations now, it's going to be very difficult to attack the cryptocurrency market. Why is that? Because according to Elaine Yu, who's a blockchain engineer, she pointed out that ICOs are untraceable, international, have no central authority, funds can't be frozen, and the SEC ICO warning is the best ad for ICOs. Because think about it. If they're all around the world in all these different data centers, and each country, has this, it's not United States that's controlling it, it's basically free. And how are they going to freeze your account? It's going to be very difficult. Well, they say, well, if you're on Coinbase, guess what? They'll just freeze what's in there. Well, what happens if you have it offline? They can't touch it. And you can sign up to a different exchange. You can sign up anywhere you want. I mean, they can't freeze what you're doing. Yes, they can freeze your dollar account in the bank or PayPal, but your cryptocurrency account, very difficult to do. And this is going to force more and more individuals into cryptocurrencies, because when the government and the central banks try to take control, people don't want them taking control of their currency. They don't want the government or the central bank to have control of locking them down. They don't want that. And this is what we are seeing. This is what they want to do, and they're so afraid of it. Now, a couple of reports ago, we talked about RV sales. Now, this is coming out of John Rubino, dollarcollapse.com, and he's been looking at the RV sales. And we looked at it, and we see that RV sales are booming. And, you scratch your head, why is this happening? Maybe a lot of people are selling their homes, buying RVs, or maybe people are feeling very comfortable because of the euphoria in the stock market, and they think the economy is going to be doing well, so they go out and they buy these, play toys. And they buy them, they keep them, and they use them. So he looked at this, and basically what he noticed is that every time RV sales go up, something very strange happens. We enter a recession. Now, this is kind of odd, but he explains what happens here. Because people become very comfortable. People have been seeing the market go up for many years. Those people that are asleep, they're thinking the economy is doing well. And every time, and if we look back over time, if we look back right before 2001, if we look back right before 2008, if we go back into the 90s, into the 80s, we see the same exact pattern. All of a sudden, RV sales go up, and all of a sudden, a couple months later, all of a sudden, everything just starts to crash, and then people try to get rid of the RVs. And we've been seeing this pattern over and over. Now, the RV sales today in 2016 going into 2017 is about 2 times as what it was back in 2008, which tells us people really feel comfortable. People think that this economy is absolutely fine. And if you look at this, you can see from 90 to 2000, each time the RV sales, well, the number of dollars that are spent are higher than the last time. And that's what we're seeing right now. And basically what happens is when we enter a recession, well, all of a sudden, everything comes crashing down. When people feel comfortable about the economy, they go out and they buy houses. When people feel comfortable, they go out and buy certain things. And this is an indicator, and I'm thinking that this is probably the older generation who wants to travel the country, where they're saying, listen, I have my pension, everything looks great, I feel very comfortable. The market, my investments in the market, they're going up, so let's go out and buy something else. And we've seen this before. This is nothing new. And it always ends in a complete and utter disaster. Now we can see that the EU, they are getting prepared for bank runs. How do we know this? Well, the EU is coming out with a proposal that they're going to freeze bank accounts if there is a run on the bank. Any bank in the EU, they will freeze the accounts. So the European Union, and this is what they state, are considering measures which would allow them to temporarily stop people withdrawing money from their accounts to prevent bank runs. The move is aimed at helping rescue lenders that are deemed failing or likely to fail, but critics say it could hit confidence and might even hasten withdrawals at the first rumors of a bank being in trouble. The proposal, which has been in the works since the beginning of this year, comes less than 2 months after a run on deposits at Banco Popular. And we can see that they want this in place because they understand that this is not the only bank. We've been looking at many other banks, especially in Italy, in Spain, in Germany, and they know that these banks are not strong. And they want to say, okay, freeze the accounts, freeze the accounts. They don't want anyone taking money out of the bank. Now, are they going to wait until the bank is failing to freeze the accounts? No, they already know. And once the word gets out that the bank is not doing well, they are just going to temporarily freeze the accounts. Now, what is temporarily? They can make that whatever they want. We're temporarily off the gold standard back in 1971. 45 years is a long temporary period. So really what they're doing is they understand that the global economy is going to come crashing down, and they're going to try to save the banks. What else do they have in place? They have the bail-in. So think about what they're doing right now. If they freeze the accounts and nobody can take out any funds, they can go in and use the bail-in documents. And believe me, it's not going to be just in the EU. It's going to be everywhere. And I'm sure in the United States, they're already going to freeze it no matter what. They'll call it a bank holiday. But they want to make sure in the EU, to all the different countries, as soon as the ECB, they say, okay, we need to stop this, boom, everything's just going to come to a freeze across the entire EU. And this is why they're doing this right now, because they understand that things are going to come crashing down. And this is why we've been saying get prepared, because we are seeing a lot of signs and a lot of all of this where you can see that they are definitely getting prepared for something very, very major. I mean, you don't do all of this. You don't put into place a bail-in document because now you can't bail out. You don't put into a place where let's freeze accounts to make sure that we can keep all the funds in the banks. You don't do all of this because everything is fine. You do this because you understand that something bad is happening, because you already know that the banks are insolvent. You already know that the stress tests are completely fake, phony, and false. You already know that the GDP numbers in the United States and many other countries are completely manipulated, that the economic numbers, the employment numbers, and many more are completely manipulated. They already know that this is a fake global economy. They realize it. They understand it. And they're hoping that they can keep everyone basically in the dark until they get everything in place. And they do this very slowly. Look what has been done throughout the many years. And many people don't even realize that this has been happening. Where they, had the bailouts, no more bailouts, they went into the bail-ins. They did test cases in Cyprus, in Greece, in India with cashless societies and locking down and freezing banks. They did some tests in Spain and Italy with bail-ins and bailouts. I mean, they're doing all of this to prepare. They're taking depositors and saying, well, now they're on the hook because it's really not your money. That belongs to the bank. But we'll just give you stocks instead. From a failing bank, of course. This is why you need to get prepared, because they're slowly doing it under the radar. They don't want anyone to see it until it's too late. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.